So hello guys, now that we're on my computer, I'm going to share with you every single thing you need to know about this simple strategy but highly effective strategy that I personally use. And for this particular video, I'll be backtesting it with a trade I took and shared in my Telegram channel. That's what I'll be using for this particular tutorial as well, so that for those in the channel, they will know that everything I'm sharing is what I personally do. So with that already said, let's get straight into this strategy and let's follow the rules of this strategy and get what we want from it. So now the first thing we're going to do with this strategy is that we'll go over to the daily time frame to identify the market direction. So now why is it important to know the market direction first? Before you place any trade, knowing what the market has done for the previous days is really important, because they'll give you a better overview of what the market is currently planning to do next. Without getting the higher overview of what the market is doing, you might actually find yourself in a deep soup. Now let me just go over. So right now we're inside my trading view right now, and this way I'm going to show you everything. So now on the daily time frame, the rule says what? First of all, identify the market direction. So now if you look at this market right now, no one has to tell you before you know that this is a pure uptrend. Whether you're a beginner or not, you should know that this market is trending upward. If you're unable to identify the market direction from looking at it, then you should consider watching one of my old videos that talks about market structure to help you identify market directions. So now once you see this market price on the daily time frame, you and I know that what we are only in for this market for a buy opportunity. Why? Because the overall market movement is to the upside, and then considering our last video, we also have what we call LTA here. In case you don't know about LTA, you can watch the video that will be tagged in this video description as well, so do well to check them out. LTA simply means low traffic areas in the market where there are a lot of clean candles that the market is likely to cover before continuing any normal movements again. So you can check that video out as well. So all of that aside, now let's focus on the main market and see what the market is doing with our strategy. So now the point number one says, well, we should know where the market is heading to. And now with the daily time frame, we find out that the market is an uptrend, meaning what? We can actually tick this thing. So now let's tick, we've identified the market direction, uptrend. Now let's identify our key levels starting from the daily to the 1 hour time frame. So for that, let me just go back. So now here now on the daily time frame, we have what? Our master resistance area is here. Remember, I don't consider the week when marking my areas. I only consider the weeks when I'm placing my trade for either take profit or considering when placing a stop loss position. And here we have our support area here on the daily. So one thing I normally do is that I normally like tagging them. So this one I'll say daily support, then copy. And then over here I have what? Daily resistance. Okay, now I have these two here, the daily support and daily resistance. I have it here. Now the next thing is that since the market is within the daily support area here, we could be expecting this market to either break below before buying or something else. So for that, we'll have this area here as extreme level. So I'll just tag it as extreme low, extreme support. So the reason why I have this one as extreme support is that in case this market break below here, it simply means that the downtrend might be really serious, so we can stand an opportunity to actually sell it from here back to this area. So for that, we're actually going to have this one. So in case the market break out of here like this, so let's say if this market breaks like this, comes here like, then we can look forward to short it to this area. Don't think this area is tiny, it's very long. You have over 200 and something pips within this area alone. So let me just go back. So now that you have this ones on the daily time frame, the next thing we need to do is that we need to go over to the 4 hour time frame as well. The reason why I need to mark the areas on the 4 hour is simply because every single candlestick on the daily time frame represents 24 hours of movement. And as a day trader, or you as a day trader, you don't have to hold your trade for too long, because whenever I hold my trade across the night, I always like regret it when there is this thing, price changes like higher spread and all those position adjustments and things. It really affects me a lot. So most of the times when I'm trading, I only have one aim: is close my trade before the New York session ends, or close my trade before the new trading day continue. That's something I always like doing a lot. So that aside, now For the sake of that, we need to use a lower time frame to actually see other key levels that we might be looking at for in the market. So for that, let's go over to the 4-hour time frame. Remember, the rule says what? You are starting from daily to 1-hour time frame. So those are the time frames you need to look out for. So from here now, on the 4-hour now, we can't really identify any new areas. One thing we can identify is that the market once created an area of resistance around this area here. You can see it here. So the market once created an area of resistance here, which I'm also going to mark. And I'll say minor 4-hour resistance. So now the reason I have this one as a minor 4-hour resistance is that if we must enter this market, for us to get the best outcome of this market, we need the market to break out of here first. I will explain that when it's time for us to take our entry opportunity. So now after that, we'll come over to the 1-hour time frame. We can see that every other level we marked on the 4-hour is the daily to 4-hour is also visible on the 1-hour, except this area here that we also need to consider on the 1-hour as well. So for this particular area, I'm going to give it green because I'll make it thinner because I'll consider it as a take profit position. That's if we buy from here, it's going to be our take profit position. Personally, this market, I know the outcome of this market already because I personally traded the market and I'm using how I analyze it before placing the order to do this tutorial for you. So don't think I don't know what is going to happen in the market. I already know what is going to happen because I personally traded this market and I'm just sharing with you my setup once I was trading the market. So like this, now we have every single thing we needed in this market. Everything is set up like this. Now, why are we more interested in buying this market despite seeing the market actually going downwards? The reason why we are more interested in buying, the reason why I was more interested in buying is simply because of one thing. The overall market direction on the daily time frame is an uptrend. And the only condition in which this market will sell is if the market is able to break this support area. Until the market breaks this support area, there's no way this market is going to sell. The reason why there is no way is that we have another support area here that the market respected. You can see the market respected it before coming back down again. So if the market should come here, then we'll be interested in selling. But until the market break out of this one, we are more interested in a buy opportunity. So with that, now we know that okay, we are more interested in a buy, and now it's time for us to look for our entry opportunity. And now when it comes to looking for entry up, so we are done with identifying the daily time frame. We've also marked our key levels. So in case you don't understand the key levels we marked, let me give you a little recap. Coming over to the 4-hour time frame, we marked what? Our daily resistance area, our daily support area, and our daily extreme support area. Now, when we came over to the 4-hour time frame, we identified that there's a minor resistance area here where the market might decide to use as a resistance if it should continue downward, or as a support if it should continue upward. So for that, on the 4-hour, we need to mark it out and name it minor 4-hour resistance. And this one here, we'll call it 1-hour key zone. So I just have it as 1-hour key zone, because I'm likely to use as a take profit position depending on where I enter the market. So now this is simply how I mark my chart. Once I mark my chart like this, I don't have anything to do on my computer again. All I simply do is that I set alert. So what I normally do is I'll set alert on this touch line, on this line here like this, and I set under alert here. The reason I'm setting the alert is that once the market gets here, I want to be on my chart to monitor what's happening here before I get in. And if you should get here also, I want to do the same thing. So here's our resistance. Here is our minor key area on the 1-hour time frame. Here is another minor resistance area on the 4-hour time frame that we are not really sure of what the market is going to do around here until it breaks either above it or breaks below this other one here. And over here is our daily support area, and then here is our daily extreme support area. So in case you are someone who doesn't understand anything about support and resistance, then I actually have a video that you can go check out that will be tagged in this video description. After this particular tutorial, I'm going to use the real market to also do analytics for you so that you can monitor that trade during the day. So now that we have this right now, it's time for you to look for your entry opportunity. For that, the rule says we should be looking between 1 hour to 15 minutes. So for that, let's go back into our charts. Sorry, let me go back to the chart. Okay, so now let's go over to the 1 hour time frame to look for our entry opportunity. So here the market is still below this area, so we don't have any entry opportunity yet. Why? Because the market hasn't broken above here and it's still below here, so we can't enter yet. So now let's just play the candles and see where the market breaks out first, because if it should break out from here first, then we'll be considering looking for a sell opportunity. But if it should break to the upside first, we'll be more concerned about getting into a buy. So now let's see it play out. Let me just use a 30 minutes. Okay, so now let's see the market play out from here. Okay, so now this is how I wait for my trade. If this, like, it takes a lot of time for some of my trades to play out, and when they do, they really go well. So what can you see here? You can see that the market is back to this minor resistance area and then it's bouncing backwards again. Remember, the only time you should consider selling this market is if this market should break out of this area, because the whole market might be ranging within here and do the unthinkable. So for that, it's better for the market to break out of key areas before you get in. So let's see what happens here. Okay, so now let's go over to the 15-minute time frame to see. You can see here you have a clear breakout from this area. Now you have a clear breakout. Now, depending on the kind of trader you are and the kind of position you like taking, if you are someone who like taking aggressive positions, the market is good for you to buy. And if you are someone who is not good at taking aggressive position as well, you can patiently wait to see if the market is going to come back to retest. So if you're an aggressive seller, as I already said, if you're an aggressive trader, you can just place your entry opportunity from here. Like, you can just get in from here like this, and then with your stop loss below this recent low, and then just aim for your take profits like that if you're an aggressive trader. But based on the way I trade and the one I will advise in most cases is that most times if market breakout like this, it could be a fake out, so you can actually wait for a retest before determining if you want to get in or not. So for me right now, the main trade I took, I got in immediately. But for the best practice, I will not advise you get in immediately. So for that, let's see what the market does from here. If it should come back and retest. If it doesn't retest, then we'll look for another opportunity to enter the market. So okay, it's coming back right now. Let's see if it will actually retest. So you can see that the market did not come back to retest. But one thing we have is that the market just gave us what? A bullish engulfing candlestick here. This is a bullish engulfing candlestick. So with this in mind right now, I'm just going to get another mark from here. So now if you are someone who trade candlestick patterns, like if you trade candlestick patterns, then you can be looking for an opportunity to actually get into the market from here. That's if you trade candlestick patterns, you can get in with this bullish engulfing candlestick. But for me still, I will just mark at this place like this, and then let's see. So the next thing I'm waiting for is I want this market to actually trade back into this area before I will buy it from here. The reason I will buy it from here is that this is an engulfing bullish candlestick, meaning the market can come back to this area again to come and retest this candlestick halfway before moving. So now let's see what happens from here. So now we are looking for our entry opportunity. Remember, we missed the initial breakout because the market did not come back to retest the key level. Because one thing I always love doing is I always like waiting for market to retest key levels before I trade. Now the market has given us this bullish engulfing candlestick, which means that you can also buy it from here, or if you are waiting for a more better opportunity, which without the fear of mixing out, then you can wait for the market to come back. So now let's see if the market actually comes back. Okay, market is giving us some rejections. Let's see what happens. Market keep going up and up. So my setups, at times I miss some good opportunities, but I'm always happy because even if I miss opportunities, I do take the good ones that comes my way. Because the best thing as a trader is not to always win every trade, but to make sure that you always follow your rules, so that you know that you are taking the right trades. It's more important than winning every trade. Following your rules is the most important thing as a trader. So I'm still waiting for the pullback to this particular area. If you are another hammer candlestick trader, you can still get into this market from here. So there are a lot of opportunities in the market, but for me to get the lower stop loss position and then a better take profit, I'm just going to extend this my line and then wait for when the market comes into it. So now let me just play it. Let me fasten it a little bit. So let's see when the market comes into it. That's when we are going to consider our entry to confirm that the market has created a new area of support Okay, here is my entry. Let me go back some few candles. Yeah, here is my entry. You can see now the market came back into it, and immediately it came back. What did it do? It gave you this long bullish rejection. And when I see this candle like this candle actually qualifies my entry. Why does it qualify my entry? One, the market came back to test this bullish engulfing candlestick, and then secondly, the market gave us this high huge rejection. The reason I always like waiting for my setups like this is simply because I always want to enter the market with a lower risk, so that when I lose and then I take another trade, I can easily cover up my trade. Like when the first trade we took on Tuesday on GBP JPY, the first trade which is the second trade, yeah. The first trade, I did not share it. It was a scalp trade, so I traded it very early in the morning, around 6 a.m. And then I took another trade later in the morning, which I shared with everyone in the community. We lost it. Then I gave another one, and then that one recovered all our losses, including our profits, and then also made us times 2 of what we lost earlier on. And that's why. And for those setups to play out, you need a high level of patience to make sure that you are always following your strategy. So that's one thing I also advise you. So now we've gotten a good entry position. So now it's time for you to actually calculate your risk in the market. So for this now, I will have my entry position around here. So let me go over to the 15 minutes. Okay, you can see on the 15 minutes, this is pretty much cool. So I have my entry around here. My stop loss is sitting right here, and then my take profit at the very top. But then I'll look at take profit one within this area in case the market tends to reverse on this area. Once the market gets to this area, I'll start monitoring it on the 5 minutes time frame to actually see if the market is going to reverse. And my stop loss position, I'm not sure if the market is ever going to break below this area again, so I'm just going to keep my stop loss position like this. So now let's actually calculate our risk to reward here. So here our stop loss position is what? Is 54 pips. And then take profit. Oh, sorry. Take profit is how many pips? 162 pips. So now it's time for you to actually calculate your risk to your position size. So now to calculate your position size, to know how much you are risking in the particular trade, come over to Google and search for position size calculator. I already have it there. So once you come over here now, go to this other website here called my FS book. So once you come over here now, you have some information to fill in. Currency pair. So it's simply GBP JPY. So let me look for a GBP JPY. Okay, let me search for it again. It's like there's an ad pop-up. Continue to my FS book. Later. Let me just refresh the site again. Okay, so currency pair, I'm going to pick GBP JPY, and then account currency US dollar, account size. So just enter your account balance here. For this tutorial, let me just use random figures. 6,890. Risk ratio in percentage. For this, I would like to go in with currency. Enter the amount you actually want to risk. So for example, let me say I want to risk a total of maybe $50, and then my stop loss position. So let me say I want to use how many pips is measured here. Let me see how many pips we measured here. Okay, let me say 55 pips. So here I'll just put 55, and then trade lot size. So the lot size in which you want to trade. Okay, so after this, just hit on calculate. So units, so you have to use this lot size, 0.14 lot size. So this is a lot size you simply have to use to actually enter this market. So 0.4 lot size. With 0.4 lot size, you can use this as stop loss position, and then you only be risking this amount. So this one now, when you are placing your order, you just copy this one and use this one as a lot size. And risk ratio is simply 0.73% of your total account. Units 14,222. So this one is pretty much cool because you know how much you're actually going to risk for the particular trade that you are entering. So this is simply all you simply have to do. Just know your values, calculate everything, and know that okay, if the trade go against you, this is the amount of money you will be losing, which is $50. So you are risking just $50. So now we know that we are risking $50, and if we are making profit, this is the amount of profit we'll be making, which is this gap over here. So now let's see if our entry get triggered at this point and see what happens after all. So that's our entry got triggered. Market is going to our direction. Okay. So it's dancing back to our entry again. So now let's just go back to the 10-minute time, the 10x faster, and see what the market does. So pretty much we are still in good position because the market came and then still bounced off again. And then let's see what happens from here. Okay. So if you are someone who holds your trade for long, you might still be holding by now. And if you are in my Telegram group, you know that I don't hold my trade for too long. So now let me see how many days this trade has been running. For that, let me just use this one. Our trade got triggered at this point. Let me just reset the chart view and see when our trade got triggered. So it's still barely 1 day and 5 hours. So it's pretty much cool for people who hold their trade for long. And for me personally, I would have been out of this market either at this point or when the market came back here. I'm not sure I'll still be holding again to avoid overnight charges and things. But let's see what plays out after all and see where the market goes to. So let's see if it eventually hits our TP. So now let me just go to a higher time frame so to pump faster. So let me adjust it and see where the market is. And boom. So if you are a patient trader who can hold trade for very long, then after how many days? After 2 days and 20 more hours, which is not really accurate, it might be less than that. The whole movement might be less than that. But after that period of time, you were able to make this total amount of money. So if you were risking $50 for 50 pips, now you have 149 pips. So you know what is there. So for every 50 pp, let's say you made $50. So 100 pips will give you what? $100. So if 100 pips give you $100, you still have what? 40 more pips. So you calculate it again. So you'll probably be around $120 to $130 profit after holding for 2 days if you use 0.14 lot size. So this is pretty much the calculation, and the trade was really straightforward. Now this is simply how this strategy works. There's nothing much complicated. You saw every single thing I did, and in case it doesn't, just rewatch this video again and then also pay more attention to the words I'm saying in the video to be able to learn more. And when watching my YouTube videos, my strategy video, here's one thing I will always tell you: don't just watch my videos and go and continue. Take this information, backtest them over and over again. If you are finding difficulties whilst backtesting them, ask me right in my Telegram channel and I'll be there to help you. The Telegram channel is connected to a group that is open for everyone to request for anything at all, state their difficulties and get them solved. So going back on the strategy, daily time frame, look for market direction, mark your key levels within the daily time frame to the 1 hour time frame, look for your entry position within the 1 hour to 15-minute time frame, and then calculate your position size before you get in to know how much you will lose in case the market goes against you. So this particular trade I took here, I used for this example, I personally traded it and dropped it in my Telegram channel as well. So with that already said, hello guys, have a nice day. Hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section.